if you've got a business that's got any kind of complexity, at least once a month, you need to have someone executing a monthly close that produces a result. Here's our P&L for last month. Here's how much cash we have, what we owe our clients, what we owe our vendors, what they owe us, and then have a discussion about whether those things are moving in the direction that you want to. If you don't do it every month, some people try to do it every quarter. In my experience, people that try to do it every quarter, it winds up, oh, we'll just push Q4 into the Q1 review for the whole year. You got to do it every month because things change and you got to do it frequently enough to notice the fluctuation to consider doing something about it.
Hey, it's the Profit Answer Man, Rocky Lalvani. If you're new to the podcast, check out my interview with Mike Michalowicz. It's episode number 2. If you want to hear about each chapter in the Profit First book, go back and listen to episodes 3 through 13. Episode 1 is the why and how. On the Profit Answer Man, we learn money mastery without all the complicated accounting mumbo-jumbo using a simple system. Your accountant is busy documenting your transactions and creating a rearview mirror of what happened. My guess is you don't even look at the reports they sent you. If you're like most business owners, you struggle with this, and it's not your fault. We aren't taught money in school, and accountants aren't taught how to be profitable. The Profit First system created by Mike Michalowicz works, and he certified me to help you implement the system in your business. Remember, the new equation is sales minus profit equals expenses. Let's face it, without cash flow, you can't pay your employees, buy needed materials, or pay your mortgage and support your family. I help you to do that and more, so you can focus on the parts of the business you love and receive the rewards for your labor and investment into your business. The stronger you are as a business owner, the more jobs you create, the better we are as a country. Small business owners are the backbone of America, and for that, you deserve to be well rewarded. Just remember, more revenue does not equal more profit. That's why we focus on the bottom line.
Let's face it, most people hate bookkeeping. I know I do. I have a love-hate relationship with QuickBooks. Sometimes it's nerve-wracking, but I also understand the importance of good, clean books and accounting and knowing what the numbers are so we can make better choices in our businesses, measure the results, and at the end of the day, we get a nice tax deduction for that. If you don't have good records, you could be losing thousands upon thousands of dollars inside your business. Imagine pairing AI with your accounting to make it simpler. That's what happens when you match coding with accounting, and that's what our guest is here to share. After growing up in Houston, Jesse Rubenfeld began his career in New York City at the Lime Group of companies, doing the books for a variety of companies, gaining experience with a variety of industries. After serving as LimeWire's CFO, he joined their D&E Shaw Group as the controller of research division that builds supercomputers to revolutionize drug discovery. From the beginning, his interests in technology led him to automate financial operations, first with spreadsheets, then Perl, and now with Python. He founded FinOptimal to help QuickBooks online-based businesses streamline their financial operations, optimizing value per dollar with an outsourced accounting service, heavily focused on automation. He's got a bachelor's degree from UPenn and Wharton and an MBA from Columbia. Let's meet Jesse. Welcome to the Profit Answer Man, Jesse Rubenfeld. It's great to have you join us today.
Thanks, Rocky. Great to be here.
Can you share a little bit about yourself and your business?
Grew up in Houston, Texas. I went to undergrad at Penn. And then I spent the next 18 years of my career in New York doing all sorts of accounting jobs. I started at the bottom, working at LimeWire, doing data entry for accounts payable, working for the controller and the CFO, executing the monthly close. Ultimately worked my way up to CFO at LimeWire, later controller at D.E. Shaw Research, and discovered a strength in automating financial operations to try to elevate the role of the accounting and finance professional, which is really what FinOptimal is all about. So I'm a coder, I'm a CPA, and we're trying to build a company at the intersection of those two things that is a thought partner for our clients that are small businesses on QBO, trying to get better leverage from their financial data so that they can make more profit first.
We love making profit. It's always a good thing. And needless to say, you've been in the entire side of the accounting spectrum. So it gives you the vision of what needs to occur at each step and what the KPIs and the results and what people are looking for from each of those different positions. Before we get to that, though, you understand the concept of profit first. But as you built this business, you made a decision to lose money. Why would you do that?
Wow, Rocky, it was a very tough decision, not just lose money, but give up a percentage of my company. When I started the business and for the next 7 or 8 years, when I was doing it as a side hustle, it was always profitable. We never had a down month. The customers paid at the beginning of the month, and we paid contractors, employees later on, and we grew the business significantly that way. Ultimately, we made a tough call that basically, if you're going to grow faster than the competition, which also is raising capital, in our case, venture capital, if you want to keep up, you need to make a choice. You can't get back the time that you spend bootstrapping. You can bootstrap profitably forever, but if you get leapfrogged by somebody who raises $100 million and hires the best developers, the best accountants, then ultimately you might lose the race. So unfortunately, the tortoise is not always the winner in today's world. And you may have to decide, I'm going to temporarily put profit aside so that I can grow the top line, grow our capability, and get some partners, which are equity investors. So that was a very, because now we've gone from a team of 3 or 4 people when I was doing it alone and profitable to a team of almost 20 with all sorts of interesting, different people from different backgrounds with different strengths. And we're working our way back towards profitable again, but we've leapfrogged. We've taken much greater strides towards the company we want to be.
And we were talking about Stretch before, which is a book that I've come to recently love. And they took the tortoise route and they waited for all the VC guys to blow up and all the big spenders to blow up. And then they bought all their stuff for pennies on the dollar and then off they went. So the race is
hopefully that won't be us.
Hopefully that won't be.
Rest assured, I raised as little as I could, so I'd have to give up as little of my company as I could.
Well, and you're not VC, right?
We do have VC in our cap table. All VC right. And some angels.
Okay. I'm just saying the guy who raised 100 million's got a lot of expectations behind him, expecting growth yesterday, not even tomorrow. So
100%. I won't name any names, but you can rest assured we're biting their ankles as we speak.
And, it would not surprise me as time went on that you would win because they're forced to spend money that they don't need to just to show that they're spending money to make progress. And I think the big thing that came out of that book is they waste money on growth just to say they're growing or trying.
100%. You push a string. It's like you're pushing a string up a hill. It doesn't go that way. You want it to, but it won't. Stay focused on the profit, baby.
Stay focused on the profit. So let's just take kind of a step back. You had all of these different roles. And one of the things I find when I talk to small business owners is they don't know the differentiate between what's a CPA, what's a controller, what's a CFO really do, and what they're looking at and what they deliver.
I think that's a big problem. It's a communication problem. It's a nomenclature problem. One of the first things we do when we're pitching prospective clients is try to clarify what we're not. For example, even though I'm a CPA, I've never worked as an auditor. I've never prepared tax returns, and FinOptimal does not do either of those things. But those are things that when people think of, I need an accountant, very frequently they're thinking about, I need someone to do my taxes. I need someone to give me tax advice. If they're a larger company, it means I need someone to compile or review or audit my financial statements so that I can give them to the bank to get a loan, so that I can give them to investors, so that I can report on them at my board meeting. And we do none of those things, but they're very important functions that belong to the accounting profession. What I did in my career, what I'm best at automating and helping our clients with, I will summarize as ongoing accounting, which is to say the monthly close, booking entries efficiently, working with management when I was a full-time employee and our clients, now that we're doing this as a business, to figure out what they want to see, right? What is the formula for profit for our clients? What are the dials that they can twist? What feedback do they need from their financial statements, which it's our job to prepare every month, so that they can make good choices about how to stay profitable?
And I think that was a major aha that I had just not long ago in how to explain this. You know, if I'm a big company, it's kind of like the cockpit of a 747. There's a million dials out there, right? Most small business owners, they're not flying 747s. We're flying a Cessna. We got a handful of dials. But the reality is, I think the dial that most business owners look at is the fuel tank. You know, how much cash do I have? And unfortunately, it's the only dial that many of them look at. They don't look at the rest of the dials to say what's going on. And a classic example, you know, if you're flying a Cessna and you don't have instruments, as long as it's a beautiful sunny day and the wind's at your back, the economy's good, life is easy. We're just soaring along. But you get into the clouds in the rain and you're not sure where you're at, and you don't know how to read the gauges, you get yourself in trouble. And even if you can read some of them, you can look at the altimeter and say, it says I'm at 8,000 feet. Okay, I'm not near the ground. Life is good, you know, and I've got a full tank of gas, so life is good. Not realizing the mountain in front of you that's covered in fog is at 10,000 feet, and you're heading straight at it.
I love that analogy. I like to say, because I was trained by the people who taught me everything I know at the beginning of my career, that the accountants and the finance professionals in a business are the eyes and ears, financially speaking, of the company, right? They're in the Cessna. They know whatever dials are available to that small business. They know how to use them better than the person running the business as a general rule. And the controller, for example, who's typically the leader of the accounting group at whatever small business or even larger business they're working at, is going to be able to see past just how is my bank account doing to things like, what is my accrual net income for the month, right? Even if I'm getting paid this month for something I'm paying out for next month, how do I line up those events so that I can figure out my margins by subtracting the thing that happens next month from the money that comes in this month? Right? That's a much better indicator than the cash in, cash out, like you were saying.
Correct. And we'll dig into that in a second. As you mentioned, right, the accounting people are looking at the dials. If it's a smart business owner, he's hanging out in the back thinking. And when he needs to know what's going on, they'll come out and say, here's what's going on. Most business owners are too busy trying to fix the plane. Maybe they're trying to build the plane as they're building the business, but you got to get in the right seats and put the right people in the right places. So can we explain accrual accounting? Because I think for most business owners, this is really difficult. Most small business owners are just doing cash accounting and they don't realize why they don't have a clear picture of what's going on.
Totally. I'm going to sum it up as saying cash basis accounting is accounting based on money in, money out. The bank account, using the bank account as the sole barometer. Accrual accounting is when did you earn it and when did you use it? Key distinction, right? Even if I paid for it last month, if I don't use it until this month, the accounting entry needs to be in this month, even if I paid for it last month. And accrual accounting is about booking things to QuickBooks in a way that preserves the integrity of the cash statement, bank reconciliation ties out, but also shows me how much money did I make this month when I line up the money I earned this month, not necessarily received this month, with the money that I spent this month, even if it didn't leave my bank account this month.
So let me give you an example to make this simple to understand. I'm in a business and I sell stuff. So last month, I bought a whole bunch of inventory and I didn't sell it last month. I just bought it. And maybe I paid for it. Maybe I didn't. And when you look at a P&L, if I paid for it last month under cash, I probably might have looked like I lost a lot of money last month because I bought all this inventory and I didn't sell it. If we used accrual, I could buy all the inventory last month. It wouldn't show up on my P&L because I didn't sell it. When I actually sold it, I would show that, hey, here's my sales. And then my cost of goods would now come up in that month to match the sale. And you wouldn't have the ups and downs and the spikes that drive every business owner crazy because you're tying when you're selling it to the actual cost of goods in that moment. Without accrual accounting, well, you might have paid for it last month. You might owe it next month and forgot that you have to pay the bill, which is a whole nother story. But accrual accounting will tell you what your bills are and how much you owe that you haven't paid yet. So that's your accounts payable, and it keeps track of all of these. And it gives you a better idea of what's coming in, what's going out. You can look at it and determine when, and now you can actually predict your cash flow. Because what we do for our clients is we just lay it all out for you. So you can look ahead. And for some people, they know, like some of my clients have a long-term contract. Okay, we sold a product for $100,000. Here's the payment schedule. We're not going to be perfect, but I know approximately when the money's coming in. I know approximately what I have to put out. I know what my general overhead is each month. We can look out, and I've got people, we're looking out 6 to 9 months. I can say, thumbs up today that the next 6 months are smooth sailing. But at the same point, I can say to them, thumbs down on sales, because if you don't start getting some sales in the next 60 days, we're going to have problems in 7 months.
Totally. I think the inventory example is great. I think the sort of the prepaid expenses or the deferred revenue, right? I think what you were alluding to, we see a lot of clients come to us, for example, where they will get paid by their clients today and expect 6 months of service, right? And that 6 months of service, that is to say, delivering what their customer paid for, requires them to pay other people, contractors, and maybe they have to prepay the contractor. Maybe they pay for the contractor as the contractor does the work. This is true in construction. It's true in professional services. You have to figure out a way to articulate, for example, if you went out of business today, right? Half of the cash on your balance sheet, half of the cash that you have, you would have to return because people paid you for stuff they expect you to deliver over the next 6 months. And if you're not going to deliver it, they're going to expect their money back. So even though your bank account is through the roof, hey, watch out. You have not earned that money yet. That is deferred revenue, right? So once you start to speak the language of business, which is accounting, you then get into concepts like working capital and other kind of key performance indicators and metrics that investors think about when they talk about your business as a financial package, right? If you have heavy working capital requirements, which is to say you've got to buy a lot of inventory before you can make any money in your first example. If you want to grow, well, you have to spend money to make that money later. You have heavy working capital requirements. You could actually go bankrupt while you're growing. The growth could literally kill you. Whereas if you have what FinOptimal had at the beginning, which is effectively negative working capital, you're getting paid in advance, right? You could grow much faster. You're going to be gated only by your capacity to deliver the service. So there's just a lot of different dynamics, concepts that are open to you to discuss once you start to think about these things.
And so this is where it gets really important. You have to think about your business model, how you bill clients, whether you can get the cash up front or whether it's later, and whether it's predictable or not predictable, and whether it's recurring revenue or you got to keep going out and hunting every day. So I'm lazy, right? It's just natural. I built my business so that I get paid up front. and I get paid recurring, and I don't have to worry about these things. And it makes life so much easier, but you have to think, and it sounds like you built your business the same way. If you don't think about that, then it's a struggle. I can't tell you how many small business owners that I've dealt with. Not only did they not build it that way, they keep forgetting to send me invoices, so they don't get paid for months on end. I'm like, I don't know how you stay in business, but hey, that's the problem we're supposed to solve. So you bring together the intersection of tech and accounting. How do we automate all this stuff? How do we make it faster? Because I'm going to tell you something. No business owner wants to deal with this stuff. They want to go do what they love, and accounting ain't on the list.
I think that's a great question. Let me use the example of some of your clients who forgot to invoice you, because that's a very common use case that we help clients with at the beginning to organize their invoicing process. For example, we'll have them, they may already have this, a spreadsheet with all of their clients and a column for each month that they're invoicing their clients on a monthly retainer basis. And when they come to us, either they don't have a spreadsheet like that, or they do, but somebody on their team has to manually go in and key the invoices into QuickBooks Online and send the invoices out. We help get the invoices into QuickBooks automatically directly from the spreadsheet, right? Let's systematize, let's automate the part of the invoicing process that you don't really need a person to do. You need a person to think through, how much should I invoice these clients? Although if they're on a monthly retainer basis, I'm copying the July column, pasting it into the August column. If this client left, delete that cell. If a new client joined, add it to the bottom of a list. But then I want to hit go, create a bunch of invoices, and then they never forget again because it's automated. We help them understand the process, the systems in play, and the data so that the things that need to happen can happen automatically.
So let's just kind of take a step back. Give me a big picture of all the things that you help them bring together within QuickBooks.
Sure. Another example would be payroll accounting, right? So if you're a professional service business, like a PR firm or a law firm or an accountancy, a bookkeeping firm, and your team uses a time tracker, an important thing for you to figure out when you're looking at your business is, hey, am I making or losing money on this or that client? How much time did I spend? And what did that time cost me? And the way most third-party payroll providers book payroll, it's at the very summary level, right? So one thing we'll do is book payroll for our clients by person in an automated way. And then we'll automatically book journal entries that uses that time tracker data to divide that payroll expense out by client or by project, in the case of, say, a construction company, so that they can see, how am I doing on a per project, on a per client basis that I couldn't see before when, this payroll provider was just booking payroll for me directly, and when I was just ignoring the time tracker data. Does that make sense? Allocation.
It does. I'm just wondering, would they know how productive their employees are, or they're generally not looking at it? Because I find in a lot of areas, especially when you're billing out your people time, they are not doing a good job of going, hey, wait a minute, there's a 40-hour week and this guy only billed out 16 of them. What's he doing the other 24 hours? Like hanging out at the cooler? Or
that's a great point. Just looking at the time tracker data, just reviewing it in a structured way, forget connecting the dollars to it. It's a great way to think about your business. Wow, yeah, I'm not getting a lot of utilization from this or that person. Or wow, this person's really killing it. Look how many hours they're billing. That's really, really helpful. And the result becomes, when you have an integrated system that, like, we're using tools that pull and push data from time trackers, from payroll. They book automated accounting entries and then give our clients reporting to see the cold, hard data that they need, right? So we talked about time tracker data. We talked about payroll data. Maybe there's other data, like if they're selling software on Stripe, right? There's third-party Stripe data. If they're selling on Shopify, there's data from Shopify. There's tons and tons of data. But turning that into meaningful accounting insight, finance insight, is the heavy lift. That's what we do for our clients.
One of the things I found, what we started to do was we just posted the utilization rates. And by posting utilization rates, things just automatically fix themselves. Just funny how that happens. Just giving awareness to the employees and going, hey, here are 10 employees. You know, last week, this one billed 16 hours and this one billed 32 hours. You start posting that and very quickly you'll start to see people being a little bit more utilized or accountable.
So, yeah, never underestimate the value of public shame. There's also the element of you're speeding and you see a posted speed limit and you know you're going above it. That's one thing. But when there's a little speedometer that's telling you, hey, you're going this fast, right? Just having that feedback in your face empirically makes people slow down. Or in the case that you mentioned, makes people speed up, right? Hey, here's how you're performing relative to the benchmark, you know.
And this wasn't
to up pace.
It wasn't about shame. It was just about being totally open and honest and showing what's going on within the system. So people, 100%. A lot of times people don't know. I mean, how often do you sit down, you look at your phone and an hour went by? Like, your people are doing that too. Now, at least it becomes awareness of what's going on with regards to that. What else can you automate?
Well, let's see. You mentioned inventory. Inventory accounting can do it very simply. You can do it with a lot of complexity with a FIFO queue where the units that you bought this month are less expensive than the units you'll buy next month because shipping costs. There's a lot of different ways to do it, but we automate booking of inventory adjustments and cost of goods, which is a huge lift for our clients that actually have inventory. Another is reporting financials. Having a dashboard that automatically updates based on things that happen in QuickBooks. So instead of having a lot of clients when they come to us, we'll have a process where they export a P&L and balance sheet from QBO every month. And then they have a process where they dump it into their financial model and then address variances and make sure that everything matches up with the budget category. We try to build something that will do that automatically and work with whatever spreadsheet our client was already using. We try to make them change the minimal amount, but still get value out of that spreadsheet like they couldn't before because it didn't talk to QuickBooks.
Makes sense. What are the biggest struggles that you see most small business owners face when it comes to their finances?
Lack of visibility and lack of regularity. You got to look at it every month, not just your bank account. You mentioned the bank account. It's really true. It's clear that you see this with your client base too. People do use how that Chase account is doing as a proxy for what kind of month they had. And sometimes if you're really in a cash business, that makes sense. But if you've got a business that's got any kind of complexity, at least once a month, you need to have someone executing a monthly close that produces a result. Here's our P&L for last month. Here's how much cash we have, what we owe our clients, what we owe our vendors, what they owe us, and then have a discussion about whether those things are moving in the direction that you want to. If you don't do it every month, some people try to do it every quarter. In my experience, people that try to do it every quarter, it winds up, we'll just push Q4 into the Q1 review for the whole year. You got to do it every month because things change and you got to do it frequently enough to notice the fluctuation to consider doing something about it.
Well, not only that, the more often you do it, the faster you have clarity on what's coming next. If you want to drive down the highway at 65 miles an hour and say, I'm just going to look every mile post of what's coming up in the next mile, my guess is you might crash in between the mile markers. And that's basically what you're saying.
That's right. Look at the big green sign that tells you how many miles you still have to go and make sure you got enough gas in the tank.
And make sure you're in the middle of the road.
That's right.
And what's
not an
around
oncoming
you.
traffic.
Not an oncoming traffic. Having clarity around that. Is it easy to set up all this automation for the clients?
It's easy for us. We have a lot of software that I've built as a practitioner, as the guy that's been that controller, that CFO, as someone who knows what the business needs to see from working with our clients that have intuition about what they need to see. It's easy for accountants, especially accountants who can write code, accounting and engineers together. with the right company culture, which is what we're building, to solve those problems. That's very specific. I liken it to a wedding photographer using Photoshop. It's easy for the wedding photographer to use Photoshop to get your pictures the way you want them. It's very, very hard for you to use Photoshop if the photographer said, here's the raw data, good luck, right? So we're using QuickBooks like the wedding photographer would use Photoshop. And for us, it's easy and fun.
And that's when life gets fun, when you do what you love and you do it well and you help other people. Is there anything that we should have talked about today that we didn't get a chance to?
We are releasing a product. So currently we sell a monthly accounting service, and we're releasing software that our clients and other accountants and bookkeepers can actually buy to handle deferred revenue, prepaid expenses, and fixed assets. So that's something that we're really excited about. That's sort of a new direction for our business, which historically has been only about delivering a monthly close, which we're very good at. But I guess the one thing that I'd like to cover, I'd invite your listeners to give themselves a financial health screening. Okay. I would like them to ask themselves 3 questions, and then their answers can be never, rarely, sometimes, or always. Okay, number 1, you leverage financial data when making critical business decisions. 2, you have accurate, timely financial data when you need it. 3, you understand the impact a decision will have on your people, processes, and technology before making it. Right? So again, never, rarely, sometimes, always. If you're not in always in every column, then it's time to give an accountant a closer look.
So I told you before we got on the air, I wouldn't hold it against you that you're a CPA. I find most accountants don't talk the language of business, which you do, because you've been in that role of having to understand how the accounting affects the business. And I think for most accountants, they're just, hey, we made a bunch of debits and credits and we fixed your inventory. Here you go. And there's no explanation of that. So you got to make sure that whoever you're talking to understands your business and how it operates and speaks your language.
They need to be a thought partner, right? They need to go beyond just giving you the answer or filing the return. Today, people want their accountants, in-house or third party, to be thought partners. We give advice for free in the sales process to demonstrate that we're listening to whatever their pain points might be and that we can help them with it.
Sounds awesome. If people would like to learn more about you, connect, where do they find out about you?
They should check out our website, finoptimal.com, book a free discovery session with us. Also follow me on LinkedIn. I'm Jesse Rubenfeld, and I talk about this stuff all the time online because I love it. And we'd love to connect with all your listeners and hope that we have added some values just by participating today.
Thank you so much for joining us today.
Thanks, Rocky.
Does automating your accounting seem helpful? Just be careful to double check it to make sure the rules are working properly. Having someone to help you with this can be a game changer. What took hours can now take minutes. Take advantage of that in your business. I've automated a lot of what we do for our clients with Excel and automating it in through QuickBooks. It's amazing what you can do these days to really save time and money. And this is just one example of how you don't need more resources. You need to be more resourceful. Remember, we focus on the bottom line.
If you'd like for us to be a part of your profitability journey, we have different programs available ranging from do-it-yourself to one-on-one coaching. Our course, The Profit Blueprint, teaches you everything you need to know to transform your profitability. There are 3 different tiers ranging from DIY to done with you so that businesses of all sizes can get the support that's best. Join the waitlist in the show notes to get more information and be a part of the next cohort. If you want a done for you service, you can hire us as your chief profitability officers. We only work with a handful of clients, so they all get our full attention. We work with business owners who have or are growing to $500,000 to $10 million in revenue. You can use the scheduling link in the show notes to get on our calendar for a good fit conversation to see if we're the right people to support you and how we can help you.
This episode of the Profit Answer Man podcast is brought to you by SMBpodcastnetwork.com. The network is a collection of podcasts and shows from around the internet which focus on bringing you interviews with amazing guests who share actionable advice, ideas, and information for small and medium-sized business owners and entrepreneurs. Visit www.smbpodcastnetwork.com to find more great shows and easily subscribe to be notified of new episodes. It's a great way to discover quality content. If you've discovered us via the network, then I hope you enjoy today's show and will consider subscribing directly so you never miss our episodes. Remember to check out my other podcast, Richer Soul, where we talk about how to live the ultimate life and be the best business owner you can be. As we close out, let's repeat the mantra. Revenue is vanity, profit is sanity, and cash is king. Have an abundant and profitable week.